We have with us Satish Pai, Managing Director for Hindalco, discussing the company's March 23 ended quarter results. Thanks for talking to us, sir. First up, take us through the numbers. We've seen a sequential improvement, but year on year the numbers remain weak. Take us through what's at play and how do you see FY24?
Yeah, I think that, the important part is the sequential because we went through a pretty tough Q2, Q3. And as we had been saying, as markets improve, input costs go down, our, performance will improve. And that's what happened in Q4. So if you look at it sequentially, both PAT, EBITDA, PAT was up 77%, EBITDA was up nearly 48%. So the sequential improvement has been strong because costs have come under control, demand was good. The Q4 to Q4 comparison is tough because Q4 of last year, the aluminium prices spiked to nearly $3,500 to $4,000 a ton when the war started, which is why the Q4 to Q4 comparisons look a bit weak. But I think the real performance is sequentially, and which is what the markets have noticed, that we had a pretty good quarter compared to the previous quarter.
Let's start with the India operations. Give us some outlook on how is the initial part of FY24 shaping up. One, in terms of what's your demand outlook both for copper and aluminium. Second, how are you seeing LME prices moving? And in this context, you are adding capacity. So how much of that comes on stream? And if you could give us more details there.
Yeah, I think that let's start with the economic demand situation in India. Both in aluminium and copper, Q4 showed nearly 10% demand increase versus Q4 of last year. So really this year has started off very good for us. Both aluminium and copper demand is very strong. I think then let's go and look at the sort of cost side. The costs are also getting under control. Q4 costs were down 6% versus Q3. So we are expecting that same cost advantage to continue into Q1 and Q2. The LME is a more of an external worldwide economic indicator. And I think that is largely the LME is a little bit weak right now. And that's largely because of macroeconomic uncertainties on whether it's the Chinese economy or whether it's the story in the US with the debt ceiling. So these are keeping the LME levels at a slightly lower level right now. Now, if you look at capacity additions in India, as you said, we have been investing last year. We'll continue to invest this year. We have 30 KT of extrusions from the Silvassa plant that has just been commissioned in January, February, and another 170 KT worth of rolling capacity that will come in Odisha in Sambalpur. That project is under execution and it will be coming in the next 24 months. So that's from the capacity addition point of view for aluminium. And on the copper side, we are investing in copper tubes for air conditioners, and that 20 KT should be coming on stream in the next 18 months.
And moving to Novelis, you have earlier explained much of the weakness there is because of the change in consumption pattern post the pandemic and also related destocking of the supply chain. So how long do you expect that destocking to continue? By when do we see a full recovery?
Yeah, so as you said, if you remember when we did the call in February, we said that destocking will continue in Q4 and Q1. And we see that now. I think that Q4 destocking went as what we thought it would. Q1, you will still see some residual destocking, especially on the can side. And I think then, Q2, Q3 onwards, we are hopeful that the can volumes will come back.
Fair point. And also give us a macro view on markets like US, Europe. We've seen a lot of economic weakness, anticipation there. So how do you see that playing out? Also specifically playing out in terms of commodity prices and demand for commodities like yours?
I think for us, the bad news of Europe is more or less factored in. In fact, we believe that there is more only upside in the Europe economy. The US is we'll have to see what happens with the recent debt ceiling crisis. But generally, people think that interest rates, probably the number of increases is not going to happen anymore. And people actually are thinking that you should start to see some cuts towards the second half of the year. I think the largest macroeconomic uncertainty is the status of the Chinese economy. And that I think we'll have to look at more data in the coming months. Then it will get clearer.
So you remain on wait and watch on the China export
Yes,
side.
yes.
Also, how is the Russia part of this pie looking like for the reasons of sanctions on Russian aluminium? How much of an impact do you expect that to have?
See, people have been talking about it, but really, I do not think it has had any significant impact on metal exchange LME prices. So it's true that most of that is going into Asian warehouses, but it seems to be getting consumed in Asia and in China. And I don't think it has had any major negative impact on LME prices as many people are speculating.
And you expect that to continue or to remain largely unaffected?
Yes, I think so. I think that, I don't think it will have a big impact in my opinion.
Okay. Moving on to your debt profile and capital expenditure plans, you have indicated 5,000 crore for India and in this financial year, another $1.8 billion for the US operations. You've also indicated you will not be seeking to raise fresh debt. So give us some sense on the debt profile, net debt numbers for India, net debt consolidated numbers, and also there was some working capital release you were expecting. So how does that cost of capital move in FY24?
Yeah, I think that, once the LME sort of came down from the highs, then the inventory valuation goes down and hence you get a working capital release. So that is what has happened in Q4. So if you look at it, our net debt to EBITDA at a console level is now 1.39 and the Indian business is largely net debt free. So our focus going forward is I don't think we're going to reduce gross debt anymore. And all the cash that we generate, we will be putting towards our growth capex. So we think that the net debt levels, Novelis, quarter on quarter can go up a little bit, but largely if you take full year FY24, you should be seeing the same net debt to EBITDA levels as FY23.
Okay. And any easing on the cost of capital, both India and console?
No, actually, cost of capital now with interest rates going up has gone up. That's why we do not want to go into the market to borrow at this time. So we will work with our internal accruals because money costs more now with interest rates at where they are.
So your cost of capital remains capped, at least remains range bound?
Yeah, I mean, the cost of capital for us, I mean, if we have to, raise more debt is going to be higher. But really, when we do our ROC calculations, our cost of capital that we assume is around in the India business around 11%. And in Novelis, it's more like 8%.
Okay. On the coal side, how are you seeing coal prices? How is it working for you? You had indicated some contracts come for renegotiations first in January and then later in April. Plus the power situation in India, all put together, how is the coal supply looking for you and also how are coal costs shaping up?
So, cautiously optimistic Q4 coal availability, coal prices were much better than Q3 and Q2. That being said, we have to realize that coal prices are still much higher than where they were 1 year ago. So we'll have to see now in FY24 how it goes because a lot of commercial mining coal should come into the market. Coal India's production also looks pretty strong. So we are hoping that coal availability and coal prices at least will stay at the current levels or start to go down.
Moving to your business segments, earlier in the call with media, you indicated you're looking at low carbon, 30% of your aluminium production to be low carbon in the next 3 to 4 years. Give us some more color on what does that mean or how does that impact your margins? Second, what is the potential market for that 30% of volumes that you're tapping?
Yeah, look, today the reality is nobody pays you extra for low carbon aluminium. It's largely, if you want to do business with certain customers, they will only take low carbon aluminium. So I think that, our drive to go low carbon is of course driven by our ESG commitments that we have made to get to net zero carbon by 2050 and also to meet some of our customer requirements. And how we do it in India is that, we are As you know, in the last quarterly call, I mentioned we have signed contracts for round-the-clock renewable using pumped hydro. We have got nearly 100, and we are putting in another 200 megawatts of solar power internally in Hindalco, solar and wind combined. So when you put all these together, over the next 3 to 4 years, we are hoping that we can get to at least 30% of our prime production to be low carbon. Low carbon, by the way, definition is less than 4 tons of carbon per ton of aluminium.
A follow-up question on the renewable power you mentioned. This was also a commercial agreement that you had with Greenco. When you look at other metal companies or conglomerates, they have considered group captive power as the way to go. They say that it's cost benefits there. Would you consider something similar with Aditya Birla Group?
Yeah, I think that, any provider we sign up with, we do take 26% to take advantage of the group captive. But besides the group captive, what I wanted to say is that Hindalco alone is investing in putting up its own solar and wind facilities, if you look at our plans that we outlined. So we will do as much internally as well as buy round-the-clock renewables from providers. Both are a part of our strategy moving forward.
One final question. You have time and again indicated that most of your focus would be in aluminium's downstream business segment. So give us some color. What's happening there? Where are the demand factors coming in? Just take us through with what we can expect.
Yeah, I think that when you look at the downstream sector in India, we actually see numerous opportunities for downstream value-added products. And so we are working on last mile mobility solutions, providing aluminium. We are working on trucks and bulkers to make aluminium trucks and bulkers. We are working on city buses that are being electrified, so they need to be made with aluminium to be light. We are working with aluminium rakes. We have in Hindalco, we have done the first aluminium rake to transport our coal. And then when you look at, many of our customers are electrifying. We are working on the battery holder to keep the battery in a car. The battery enclosing case is made of aluminium. So large number of opportunities on the value-added side in India as India electrifies more and more. And that is why we have moved into the downstream part, value-added part, more to become a solution provider than just a provider of extrusions and sheet. That's how we are positioning ourselves.
And have we seen that demand trickling in, or is it still far away from a few quarters?
No, it is starting to trickle in. That's why every one of these I mentioned, we have got the first few hundreds of last mile vehicles. So we have got a few hundred of bulkers sold already. So it's going into the market. The market is looking at the impact and the acceptance. So we are at that, what I would call the inflection point where aluminization of many of these things will start to happen. So that is what we are working on.
Is there a target you're working on of what percent of your crude aluminium production would be value added?
Oh yeah, that we've given long ago. So out of the 1.3 million, we have already said that by 2025, 600 KT will be value added. And we are working on that. Already we are at 400. 30 is coming from the new extrusion plant in Silvassa, and another 170 is coming from our Odisha project. So by 2025 end, we will be at that 600 KT of value added product that we had committed to.
Thank you. Thanks for the number. Thanks for talking to us, sir.
Yeah, thank you.